Okay, very good morning, Thursday, 3rd of May. Hope you are well, and just quickly giving you an overview of what we're going to cover. Quick recap of the Fed, the FOMC announcement from last night. As you can see, some quite whipsaw price action in terms of initial interpretation being quite dovish to then kind of change tone within a kind of hour, if you like. Quite a classic kind of, I guess, response to the subtle changes that you typically see with central banking as people take time to digest exactly what it is that's being said. So we'll have a quick look at that in a bit more detail. We'll also have a look at Theresa May, because obviously we had this kind of war cabinet meeting, if you like, from yesterday. What's the latest situation with that, with the local elections obviously underway today as well. And then we'll have a look at the calendar before I hand you over to Sam, who will look at the charts as per usual from a more technical perspective. So, first of all, just to be clear with the charts I'm looking at here, you've got the top left is euro dollar, cable beside that, and then gold in the top right. And really the areas, if I just circle the main points of activity here for the Fed, you've got this one in gold, this one in cable, and then here in the euro dollar. If I can just mark that there. This was the S&P 500 reaction. And then I've got the T-note move. So, in terms of the language, what actually happened, the statement moved in the end. It was perceived to have been incrementally more hawkish. In terms of the specifics, they recognized that inflation, this was obviously the key that we had identified as the real area that the market would be paying attention to. They said inflation has moved close to and is expected to continue to run near the committee's 2% objectives. As expected, it also emphasized that the 2% objective is a symmetric one, allowing for some overshoot as well as undershoot of inflation. So actually, there's a lot of people making a bit of a meal out of the word, quote, symmetric, and this being then they do feel like they have some wiggle room to overshoot the target. If that was the case, it means then that the Fed maybe wouldn't be immediately responsive to inflation just going slightly over target. They'd be happy to let it see a slight overrun, and as such the initial reaction was quite a dovish one in the first kind of 10-15 minutes. You'll see the dollar weakness, US yields fell, equities actually rose slightly. It's that kind of traditional monetary play of then a slower interest rate hiking cycle. However, if you start to look through the other comments, the ones that followed within the statement that got some attention, having just about reached the inflation objective, they dropped the need to continue monitoring inflation developments closely. So this is kind of a hawkish innovation in language, if you like, because what they're saying is that inflation's at target now, and actually we're just monitoring it at this point. So it's kind of reached their objectives, so nothing holding you back then from subsequent tightening thereafter. Net, I think I wouldn't read too much, and I don't want to dwell on this Fed event to a great deal, because if you actually look at the currency markets, if you actually look at gold, albeit equities a touch lower still, but net, nothing for me has really changed. The fact is that the Feds are still on track. If we just quickly switch over here, I mean, this is the type of headlines that you're seeing. Fed calm over the 2% inflation underlines, and this is the important part, gradual rate hike outlook. So this is as per typical Fed stance. They signal it's not about to react sharply to rising prices. Committee sticks with roughly balanced assessment of risk. So, it's kind of this ongoing slow progression of monetary normalization. In terms of the June rate hike prospects, we were looking at this, I think, yesterday, and it was about 94.5% following yesterday's event. It's now 95%, so hasn't really changed. So again, I don't think this is going to be something which you would really expect to see moving financial markets throughout the entirety of today. I think largely the move has really been done, and nothing has really changed at this point in time. That being said then, let's move on and look at a couple of other things. And there's been a few updates in regards to Brexit. As I mentioned, Theresa May was in a meeting yesterday, and you probably caught the tail end of that if you were looking at the news last night. Basically, the Prime Minister has been outnumbered in a meeting of her inner cabinet yesterday, with ministers unable to agree on either of the middle-of-the-road customs options that she had proposed. Ministers said to be split 6-5 against her proposal. And who's the one tipping over the balance for the 6-5 vote? Well, the brand new member, replacement of Amber Rudd, Sajid Javid, is said to have spoken against the PM. Some were thinking that, he's said to have had some loyalty potentially in the past to the Chancellor, which was the time Osborne. Would he have backed Hammond and May's view? But he actually said, quoted, that although he'd been in the job for just 3 days, he felt strongly her preferred option was unworkable. So this is the same kind of terminology that, of course, has been tabled by Jacob Rees-Mogg, and that push in regards to not following through. This is that ERG, the European Research Group, which is speaking out against what Theresa May's been tabling as potential options. So, it's tough. I know Will mentions this quite a lot. Who would want to be Theresa May, because she just can't win, essentially, before she can even start trying to sell a deal to the EU. And this is really where, obviously, as time continues to elapse, if we continue to remain in this kind of status quo, this is probably going to ratchet up in terms of potential market negativity for the pound and assets accordingly. At the moment, it still isn't, because there is time. But the point being is, she can't really start talking to Europe until she's got her own house in order. So she's got to find a proposal that both her cabinet and parliament are going to support. And this is the key kind of roadblock at the moment. In terms of Theresa May and what she said, she reiterated that she wanted to leave the EU's customs union, and then set out again her red lines for the New Deal, saying no hard border with Northern Ireland and the Republic, and so on and so forth. So still looking for the EU to be the relationship as frictionless as possible. So nothing's changed as yet, despite the evident kind of pressures that might be mounting on her. Obviously, this time tomorrow we'll have also the results of the local elections. Could that just kind of take this up a notch as well in terms of the view on her in this situation? The timeline to be aware of here is we only really have a couple of days, because some UK officials have been suggesting that it's believed the EU want to see something before the end of next week to get the ball rolling. So I don't think that's too unusual, because if you think about it from the EU's point of view, you're seeing this kind of internal politics that is developing in the UK, and obviously it's a perfect time, if I was a European politician, to be pressing the UK on we need something right now, just to amp the pressure, if you like, ramp up the pressure. As I said, is this really affecting the pound this morning? Well, no, not really. As I said, though, this is something to continue to monitor, because it does feel that this week, certainly, the Brexit issue has started to just come back to the boil, almost. So, just to be monitored. In terms of corporate earnings this morning, a couple to be aware of, some of the biggest movers. Veolia in France up about 3%, but I guess more pertinent for European stocks. Bayer, one of the biggest DAX constituents, they had generally a positive response, even though they did cut their full-year guidance, but this was predominantly due to currency effects on a stronger euro. Adidas down about 1.5%, but nothing in the way too much to have a real meaningful impact on the open this morning. If anything, European indices are slightly negative, and I would say this is just a follow-on from the lower close on Wall Street, the general cautious tone that we had in Asia stocks on the back of the slight hawkish interpretation of the FOMC from last night. Net, there's not too much new really going on, and as I said, I don't really believe that the market's going to really take this FOMC release too much further. The one thing then that you need to be mindful of today, if you're looking at the markets coming up, is 9:30 you get the UK service PMI number. Now, if you remember, the manufacturing, if I remember rightly, was a 17-month low, was weaker than expected. This comes after a series of weak economic data out of the UK, a dovish-sounding Bank of England governor, and so these prospects of a rate hike in May have dropped substantially to sub 20%, all the way from 95% about 16, 17 days ago. If this figure is weak, I think we can expect then that this May rate hike, forget about it for this time. So this definitely could move the pound, certainly given how kind of beaten down the currency pair has been over the course of the last week. Then a very strong number could see a bit of a response, and also would then cloud the kind of certainty around the May no hike. If the figure was particularly strong, it kind of is a bit of a toss-up again between, will they, won't they situation. One thing I'd say, Sam will talk about cable more, I'm sure, but, for me, it's that still same area that I think is really key, which is, that kind of, let me just see if I can, that rectangle there, basically, I've got marked up. That was the key area of the break. It's acted as resistance in terms of yesterday's session. I still think in terms of the upside, that's a really key point of interest, that kind of zone from the 37 handle. So, yep, moving cable up to a high at the moment. Just looking on this daily chart, obviously this is coming up for a retest at that 3rd of Jan, right at the beginning of the year, the high point that we printed around this 36.50. But really it's the 37 area that's more interesting as I think a near-term pretty strong level of resistance going forward. Service PMI, well, what does that look like at the moment? Well, you'll remember the last figure that we had in March saw a pretty dramatic drop-off. So you can see here it was in fact the weakest pace of expansion in the service sector since July of 2016. But if you remember, what was the reason behind that weakness? Well, it was partly due to snow disruption. And remember the beast from the east? I don't think that was a very good time to be pounding the high street looking for your cheap bargain. That would be wrapped up at home and certainly not out spending money from a service sector point of view. So yes, that was a depressed figure. Let's have a look what we're expecting on the headline. Well, look, 53.5 is the expectation. That puts us right back up here. And so this is almost a one-off item that's impacted that one figure, which I think the market will look beyond if we bounce back to a fairly consistent reading. If it was to remain depressed, I think then that's a bit more interesting, and certainly then, as I said, the prospects for a May hike are pretty much out the window. How much of a negative response would you see in the pound to a weak number? Well, that does depend on how weak the number itself is, but I would say that you've got to take into account some of the positioning of the pound more recently, and it has weakened substantially. So if I just quickly look at the pound here over the course really of this week, if it is weak, I don't think that's going to be a huge surprise. If it is just a little bit softer than expected, we might well get a retest of yesterday's low. But are we going to see the type of really big move that we've seen, kind of the 140 all the way down? We've nearly moved 400, 500 pips here in the course of about 4 trading days. I'm not sure. This, don't forget, is the forward-looking expectation that the rate hike is gone and the economic conditions have weakened. So even if it is weak in the service sector, how much of a surprise is that? I think that ability for market impact has diminished, if that makes sense. So nonetheless, 9:30, keep a close eye on that. Then you get the CPI data coming out of Europe. Of course, will also be interesting if you're trading European assets. Do recommend keeping a close eye on that. Could be fairly responsive in terms of the euro if you're looking in the FX markets. Then going into the afternoon, fairly busy. US trade balance, your weekly jobless claims. You also get the ISM non-manufacturing PMI, so this will kind of finish the full suite of employment indicators, if you like, the subcomponent of this. If you remember, the manufacturing number earlier in the week was worse than previous. ADP yesterday was pretty much in line. So far, it hasn't really had to have a meaningful impact into reanalyzing our expectations, if you like, for non-farm payrolls tomorrow. Everything's remained fairly constant, I'd say. But you've also got factory orders this afternoon. The other big thing, of course, which is happening, and I've seen some information saying that these conversations are already underway, is that the US begins its trade talks in China. Apparently they're there now, talks have begun. Both sides, though, going into this event have kind of pulled back on expectations of what it is they might achieve. Beijing said they will not agree to preconditions that include abandoning its advanced manufacturing program and agreeing to cut the trade gap by a fixed amount. American delegates said earlier, and this is kind of classic Trump administration, they said that a breakthrough is unlikely, and if there's no progression, we might leave earlier than expected if unsatisfied. So I'm not sure how much you're going to get out of these talks. I guess the point being, if it's going to move the market, is do you get a flare up of the situation? And certainly I don't think that this would come from the Chinese side, who have been continually quite diplomatic. This would come from the Trump side. And if they feed back to the president and he starts tweeting, this could be a real catalyst for market activity again in a negative way. Obviously, any renewed focus on trade wars would be equity weakness, dollar weakness, this type of movement that you've become accustomed to over the movements from a few weeks ago. All right, that's it from me. Let me hand you over to Sam then. I wish you a good day, and I'll see you in the chat room. Thanks very much.
Hi guys, good morning. Let's have a quick look over the currencies. You can see here, top left, let's bring it into picture, euro. Just with this dollar weakening a touch and what a roller coaster it's been on really in the last sort of 12 hours or so, up to R1 now. So just be careful of that in terms of perhaps looking for this overall trend to look to continue. The pound as well, as we talked about just now, just pushing higher. Just wait for that chart to load up. You can just take my word for it for now. The pound is pushing on, there you go, to the higher point it's been for the whole day. I think for the pound, with the data coming out at 9:30 and how important that could be if it was a really strong all-week number, I think best to probably sit on your hands for this particular dollar pair. But the key levels to the upside for this market, just above the R1s, the highs from yesterday. You can see just how important the high was in terms of how it held up. Was also the low of the morning and the pullback on the Tuesday. So be keeping an eye on that level as well. If we can just push a bit higher up, it might well be that the only reason that we get up there would be the data, and you'd be less likely to want to take it on. But I think best to sort of sit in your hands for now. The dollar has been up and down for the last sort of 12 hours or so. So in terms of really predicting an overall direction here, I think you're better off just sort of, having a wait and see approach. Euro, if we were to get any sort of retracement of this overall move, I really like the look of where R2 is today. I know that seems quite far away, but if we were to push back up there, more of a strong level of resistance than perhaps yesterday's highs, which sort of seem a bit mid-range. But you'd still expect those levels to sort of hold, considering the overall trend of this market. As it's been coming down, you have a decent trend line going on there as well, not just the highs but the lows as well, which have been quite well respected. Let's just get that on there. You see, so potential profit targets, if we were to get continuation, you'd look to have this trend line going down there, and that could be an area potentially that lines up with S1 later in the day. Let's just have a quick look at the trend line from the top. You can see we're just touching that now. So R1 trend line from the week or so as well, just coming into play there. Aussie dollar, which was already pushing on to the R1 this morning, we're just having another test of that. We're just sort of knocking on the door for the third time here. In terms of looking for this market to sort of really break aggressively, I'd be less keen, considering how close the high of yesterday is. So again, be careful looking to sort of go too aggressively long against this overall trend of the market. Nothing wrong with sort of sitting on your hands to wait for a really key resistance level to perhaps look to continue this. The dollar has, as you see, for all of these pairs, been up and down from that sort of 7 o'clock release last night. Let's have a quick look over at the yen to wrap up the currency pairs, and that has been on a pretty interesting journey as well from last night. Key level support other than today's low, I'd be keeping an eye on. Let me just get the chart on a bigger picture. this whole area. So was the highs that we had back on the 27th and really strong level support back on Tuesday, perhaps key level to the upside if we are to continue this move that we've been on for, again, the last sort of couple of weeks or so. So interesting day in the markets ahead, I would suggest, and obviously with non-farm payrolls tomorrow, where we close this week from a technical point of view, will definitely be interesting. But for now, markets are a bit undecided about whether we're going to get a continuation of the overall trend, or in fact today is a day where it just is a bit messy. Oil just pushed to the new high, and gasoline doing the same thing, breaking the high of yesterday. The 330 release, up, down, then you can see eventually we broke through into the back end of the evening. Yesterday's high just popped through, but obviously R1 sort of containing that. Levels to the upside, I think, to be aware of. You can see what was the high of the 27th. We then found good support on the 30th before then breaking down at the beginning of the month. That could act as a sort of a short-term ceiling for the morning. The lows of yesterday and the day before, just below S1, perhaps sort of containing that range for now. Pivot, I quite like the look of. Pivot, I think, could be a decent level of support midway between that range we just talked about. If we were to get a push on through, could expect some decent resistance around this sort of R1, R2 area. But oil overall picture, if we have a look at it over the last sort of couple of weeks of trading, it is in this choppy range consolidation. While you've got the highs not necessarily really all getting lower, or the lows getting higher, it's just a bit of a mess. No real picture there. I'd favour the upside if I had to make a decision, but I think there's better markets out there to be focusing on. Gold, obviously with the Fed last night, and same as the dollar situation, got a bit messy. Key level to the downside, if we were to break yesterday's lows, you've got S1 there in the mix, and you can see where we found resistance last night. Good level support on the 30th that we broke down. So those would be the main sort of areas where I would sort of say if we do get above there, then we got a break of this sort of dollar strength downtrend that's had an impact on gold, and we can start to push on. If we were to get below yesterday's lows and obviously break S1, then this trend may continue for quite some time. So just bear that in mind for gold. I think I would leave the pivot alone now if it was to come back. I think that's just been chopped up just a bit too much. Look over the DAX, which obviously had a great day yesterday, and you can see how that's affected the pivot points, which are miles away today. Pivot, however, also the low of yesterday's sort of morning, not too bad, just sort of getting squeezed in as well from the previous highs. So if you wanted to see a break higher, let me just get that marked up, a break of this downward sort of trend would be half interesting to get the push targeting yesterday's highs, and then beyond. Obviously these are the highest levels we've been for quite some time. Equities in the US, which took a slide into the remainder of the session yesterday. Key level that we sort of broke would have been the low from sort of 4 o'clock. If we can get to there, could expect a decent level of resistance. For me, however, I think this market, I would only be interested in really going long if we actually did get a break above here. Not to say there's not going to be opportunities if we were to say come back and test the Asian session high, which you can see has already worked. I just think from a sentiment point of view, I sort of have the buyers involved around here, a couple of decent targets above, and then the R1, or play it a bit safer and maybe with the volume later on. If we were to get a break of the low from Tuesday, which is basically today's low as well, then I'd be half interested. I think sitting on your hands for the morning, waiting for it to do its thing is not the worst idea in the world. The markets were confused last night initially, and we're starting to sort of retrace those moves. That the dollar's still on its lower point of the day. If we just have a quick look back at the currencies, you can see just coming off that high, and pound the same sort of thing. So I don't necessarily want to be getting into these markets right now. Aussie dollar still holding up as well there. Oil just coming off better levels. So UK data in just over half hour. I think the best trade there is going to be a number that comes in around sort of 56 or below 50, and I think those would be the easiest. Anything in between, 55 would obviously be quite good, but I would only really be interested in myself if we were to get really strong, or first time since the month after Brexit, a number below 50. Any questions, as usual, please get them in the chat. Enjoy the sun while it's out, and I hope you all say a prayer for the mighty Arsenal later tonight. Have a good day.